Hey there. If you have known me for any amount of time or been following me, you know that over the years, you have discovered that I'm a bit of a economic, mortgage, financial nerd, geek, or what nut, whatever you want to call it. And I like to dig into the data of of what's going on in the market. I'm a charts and graphs nut, and I love following trend lines and that sort of stuff. And I know that the market is irrational and it's emotional, so it's always interesting to take a look at it. And if you've been keeping up with me for any amount of time, well, any amount of time prior to COVID, you know that I historically have shared this information with the real estate community or anybody that's in housing. And I've been a little bit remiss about that. Actually, been a lot remiss about that. Um, and it was even before COVID, so I can't blame COVID. I just kind of got distracted with life and got away from doing it. So I've had some comments or some questions from people asking me to share information. And so I figured, you know what, maybe it's time for me to get back at it. So I'm committing out loud on screen to doing this on a regular basis. I thought Wednesdays is a good day because it's smack in the middle of the week and we're not coming off of the weekend trying to get like offers or follow up, with clients, and we're not heading into the weekend preparing for showings and listing appointments and that sort of thing. So here we are. It's Wednesday and we're going to do a little market watch. I'm going to try to keep these brief, but hit some bullet points because I think it's so important that we look at the data and we look at the information, the true information, as opposed to listening to some of these media people that just absolutely love the fear mongering. Because I got to tell you, you guys know this, when the sky is falling and the housing market is about to, burst and bubble and destroy everybody, that is a sensational news topic, but it's not the truth. So let's dig into the truth because we had some news come out this week and I want to talk about it real quick. First thing, new home sales. If you saw that, it came out yesterday and it didn't look very good. And it showed that new home sales are down and their inventory is like 10 months supply. But we have to look deeper at the report. And what we have learned from this report is that 10-month supply of homes, those are not houses that are complete. If we get rid of the homes that are, just have a foundation or just have some studs up or some sheetrock or maybe a roof, if we get rid of all those and we look at what is truly near completion, within the next 30 days completion, builders have 1 month of supply of homes. So that's not even, doesn't even come close to meeting the definition of a healthy housing market, because we know a healthy housing market is a 6-month supply. So don't let that worry you or panic you. You may have heard also that, and this was late last week, that the builder sentiment has just jumped off a cliff and just nosedived. That's true. And who can blame them? They've been battling this challenge for over a year now of getting materials and meeting deadlines. I've talked to many of them. I'm sure you have too. They're frustrated because they feel like they're pissing off clients, but there's nothing they can do about it because they can't get the windows, they can't get the brick, they can't get the lumber, whatever it is, and it's always something different, but it's a real problem. So their sentiment is a little bit damp right now. And we also know that housing starts was down this past week, but let's remember what month we're in. It is a seasonal thing, and we do tend to see a decline in building starts as we head into the fall season, particularly right after back to school. So then looking at existing homes, those sales were down 1%. 1%. Now, granted, that's 1% from last month, but I like to look at a glass half full instead of half empty. And I think a lot of this too can be attributed to the season we're in. We are back to school. We're in an inflationary time. Interest rates are higher, although they have come back down just a little bit. So it's not unusual to expect that existing home sales will be down or slightly off. Now, how much of that is attributed to the lack of inventory available to constitute a sale? And that's the data that we don't have. So, but we do know the inventory levels continue to remain uber low. We don't have enough supply. And here's an interesting little tidbit. If you haven't heard this already, you'll find this interesting. And it's great news to share with somebody that's out there thinking that the sky's falling and the housing market is about to just blow up and everything go to hell in a handbasket. We anticipate that the demand for housing is going to be present and strong demand for the next couple of years. And here's why. Historically, the largest pool of people that buy homes are age 33. And starting in late 2020, all the way through to 2024, we have more people turning age 33 than any other time in history. They all need a place to live. Now, granted, some of them will continue to rent, and we hear stories of some of them moving back home, and we know now we're starting to see more and more generational living, but still remains the largest pool of people that buy homes are coming into that magical age of 33 between now and through the end of 2024, overlapping a little bit into 2025. So keep that under your hat, or not keep it under your hat, like keep it private, but remember that it's important. It's helpful information. I think it's encouraging, especially to somebody that's buying a house and they're wondering, am I buying at the top of the market, and is the market going to crash, and then I'm going to buy this $400,000 house and it's going to be worth 100 tomorrow. Demand is going to be there. It's going to continue. And then Lawrence Yun did say that he felt like we'd hit kind of a bottom, and he expects that we're going to see home sales, existing home sales, rise at the beginning of the year. So we all know things slow down in the fall. This is a great time for us to be out there educating our clients, equipping them with ways, strategies on how to buy, sellers on how to sell. And I'm not talking about just doing the listing, but like, how do they position their home so that if prices do drop, they don't have to do a price reduction. Maybe they could offer something else. And I have a strategy for that. And it's actually a strategy that works really well for the seller and really well for the buyer. So you've got a win-win, which most oftentimes there's really not such thing as a win-win, because somebody's losing something. But this is like a beautiful thing to avoid those price reductions. But I think this is the time that we educate and we equip our clients to help them see that even though the housing market has softened, we are returning to something more normal. We are not going belly up. And I am happy to provide you with any kind of information visually. I've got lots of charts and graphs, and I'm not talking about boring ones. I've got actually some colorful, attractive ones that people may be interested in seeing. I'd be happy to share those kinds of things with you, and would entertain any of your questions and your input. So I'm going to do this on a regular basis. Please give me your feedback. I'm thinking Wednesdays is the best day because we're not coming off the weekend and busy trying to follow up with people. And we're not preparing for the weekend, trying to schedule appointments for listings and with buyers and so forth. So Wednesday I thought would be a good day where we could talk about recent news and kind of what we see on the horizon. So tomorrow, Jackson Hole, our Fed chair, Powell, has gone to Jackson. That's kind of a Johnny Cash song. He's gone to Jackson Hole to start their symposium. So kind of like that old E.F. Hutton commercial. if he says something or any of the Fed presidents say something, it could make the markets do this and go a little crazy, knee-jerk reactions either direction. So just be aware of that. We all know what inflation's doing. It's still here. Gasoline prices are up, food prices are up. There's not a lot of food on the shelves, all those kind of things. We know that. We are looking to see if they're going to be a little bit more hawkish and maybe tone down their rhetoric for the next Fed hike. So I'll let you know what I hear on that. And until then, please let me hear back from you. Love to hear from you. And I hope you have a great day and a great week. And we will see you next time.